Well, is the worst of the stock market sell-off over? Will economic growth out today and encourage the Reserve Bank to increase interest rates by 0.4 or 0.5% next Tuesday? They'll shock a few mortgage holders. And what should AGL shareholders do now that the green billionaire crusaders like Mike Cannon-Brookes have actually just taken away the demerger? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Well, Paul, tough question. Is the worst of the stock market sell-off over?
Look, I think maybe in the US, Pete, we're going to probably a bit of a bottoming process there. But look, I think a few more choppy months because the jury is still out whether inflation has actually peaked. Mm-hmm. US numbers were good. European numbers were bad last night. Yeah. Still a lot of pressure with oil prices. The oil price ain't coming down yet, right?
And that Ukraine war, big impact on European cost of energy.
And it looks like it's going to drag on and on. So, impact on both food and energy prices. So I don't think the jury's yet resolved this. I think the market got a bit ahead of itself. Yeah. That's why we're seeing a little bit of stabilisation in the US. Markets can't be volatile forever, right? They get too much volatility. Eventually, markets have to stop, right?
Yeah.
They can't take it. But I think we're in for a couple of more tough months of up and down a bit. So I think you've got time to get into the market and you can, this is a time to be a little bit greedy, it's my sense.
Yeah, and the history buffs will say, well, we haven't seen capitulation yet, but I'm not a great believer in capitulation. Well, it's a real bear market and a crash, I believe, but this is still a correction in the US, and so it's really close to a bear market. But the bottom line, I think, is that it's just the job numbers on Friday, if they're sort of implying that wages aren't growing as quickly, and a lot of the telltale signs are saying that could actually help the bottoming process that you talked about. If something really bad comes from left field, it'll go down again. But I do think if you bought now, you're not going to be looking at big losses if the market goes off for a short term, and it wouldn't be long before it turns around.
Here's left field, fourth field. The thing I look now as one of the key indicators is Bitcoin, right?
Yeah, you're right. and it went up last night, didn't it?
It is. And I said for a while, look at $30,000 US. Look at the US price, not the Aussie price. Yeah. Seems to be finding a bottom. I mean, the correlation now between Bitcoin or so-called risky assets, crypto, and stock markets is pretty strong.
It's like a bellwether for tech.
So a few people coming out and saying maybe it's bottom. So I'd keep your eye on that as much as anything else to give you an idea about market sentiment out there.
Yeah, so as I say, sell-offs are still on the cards, but we might not go as low as we've seen in recent weeks. Okay, let's go to economic growth out today. It shouldn't be a bad quarter. It started off shockingly because of COVID and the floods, but things did improve over the course of that. Of course, now the fear around interest rates didn't start in March, so the March quarter might be okay.
Yeah, I mean, I say the risk is a better number than people think, but mainly because I think net exports could be really strong. But we'll find out 11:30. I mean, look, we're not going to get a recession. It's not going to happen. So forget that. But let's see where that plays. I think that sort of leads into the sort of what does that mean for our economy going forward, and what should the RBA do, right?
That's right. They'll be looking at the numbers to try and work out if inflation is starting to peak or there's more momentum there. And it's going to have a big bearing on next Tuesday's interest rate decision, Paul. A lot of economists think it's going to be a big number. If at 0.35, they could raise by 0.4, get to a nice 0.75, but they don't care about that. They could raise by 0.5, which some economists, and we have a 0.85% cash rate. The bottom line is, I think a stitch in time might save 9.
Yeah, I mean, I think if you're going to raise interest rates, get it over and done with, right? Stop mucking around.
Rip the Band-Aid off.
Yeah, I mean, Governor Phil last time, what a classic compromise. The 0.3.
Don't you call him a wimp?
0.35. No one expected it, but he couldn't go the whole 0.5%. Yet they're worried. So get on with it, right? If you're going to put them up, stop mucking around.
And
right?
so
I say go hard, go early, right?
That's right. If they do small amounts, you might find that the cash rate by the end of this year could be getting up towards 2%. Now, Matt Common and the economics team there, they think 1.35. I interviewed HSBC's chief economist Paul Waxham. He thinks 1.35 as well. That would be a better outcome than the 2% one for the economy. So this is a really important decision next Tuesday by Dr. Phil Lowe. Let's go to the next one. AGL, it was heading for a demerger vote, looked like a certainty for a while until the green crusading billionaire Mike Cannon-Brookes came in and said, nah, we're not going to happen. And then the industry super fund Hester jumped on board. it's going to be a tough time for all companies that want to take on the.
It is. You can't take on those the believers.
Environmentalists.
The environmentalists. You can't. And and unfortunately, the industry super funds, some of our biggest shareholders, are becoming a bit captive to it because they all want to demonstrate their green credentials. So.
And a lot of members might want them to
a lot of their members,
philosophically, but maybe not share-wise and returns-wise.
Yeah, a lot of their members probably want them to. So look, I think it's a tough position. I think being an activist is always a bit of a dangerous position for a super fund because they only have one objection in law, and that is to worry about your retirement income, right?
Yeah.
Not to worry about other matters. But you can't tell that to people. But,
but there was I think a gardener in Queensland who took his industry super fund to court because he reckoned they weren't worried about his long-term returns, and that's interesting. Short-term, companies like AGL are going to lose out because of Mike Cannon-Brookes, because he's going to close down coal mines earlier and he will invest heavily in renewables, which is not going to be good for the bottom line in the short term.
Well, remember he only owns 11.3%. So this crap about him wanting 2 directors on the board, that's all rubbish, right? That is not good governance, right? He is just a shareholder like anyone else.
But he's got Hester on side.
Well, they own about 0.2% or something, right? Yeah. They could stop a demerger vote where they needed 75%, right? Okay. And they weren't going to get the 75%. But that doesn't mean he's got any right to think about it. He runs the company, and he won't, right? So the problem is now getting a board that can take in his interests and the interests of other shareholders and take it forward. I think AGL's still in play, Pete. I mean, I think if I was a shareholder, I wouldn't sell my AGL shares.
Would you buy now?
Yeah, look, it's still it's interesting. I mean, one of the things going for AGL at the moment, despite the fact they own these power stations, is electricity prices are through the roof.
That's right. Yeah.
So from a profitability point of view, right, despite not having an MD and a chairman and 2 directors going, they're going to do okay, right? Because fundamentally, 80% of their profit comes from producing dirty energy, right? Yeah. And dirty energy prices are strong, right? Yeah. Now, we don't know what happens in 10 years' time, but we can look forward to the next year or so and say that AGL is going to do okay. So I think as a shareholder, hang on. I don't think people like Brookfield and others have gone away, and who knows what Cannon-Brookes will do next. But look, I think it's probably...
Okay, but there's the bottom line that lots of companies out there that have an environmental problem, an ESG problem, could find other billionaires and other industry super funds putting pressure on them. There's going to be a new way of looking at a company, isn't it?
It is going to be a new way. And you can also say for AGL, the election of a Labor government probably helps the whole thing with Cannon-Brookes because if it's going to get out of close its coal-fired power stations early, it's going to look for government assistance to turn these zones that are, need transmission lines into renewable centres, and there's probably going to be a lot of government money on offer to help them make that change. So if they play their cards right, get the government on side, make the right sort of commitments, it may not be the disaster we're talking about. Okay. So I still think there's upside. I think the bottom line, AGL shareholders, I wouldn't sell. Okay, one last question then. In 3 years' time when the next election comes up, who's the coalition going to blame for high energy prices? Albo or Mike Cannon-Brookes? Well, probably a bit of both, right? But they'll only remember Mike Cannon-Brookes. They'll only remember Albo, right? Yeah. But this whole cost of living pressure is going to come back and bite the government. It's going to have to be careful, and it's going to have to run this carefully because. There's a bit of pressure out there. Yeah,
Albo might not be strong in economics, but he does actually have a strong economics team behind him.
The cabinet, you have to say, you've got to give marks. He's appointed a reasonably strong cabinet, and on paper, it's a lot. The Liberal government, previous cabinet, was pretty ordinary. Not a strong team. Ex-Frydenberg. And at least this looks like it's got a bit of talent there.
Yeah, I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.